Welcome back to Whiteboard Finance. My name is Marko and I'm here to help you master your money and build your wealth. These are my 3 stock picks for February of 2018, so stay tuned. 9-year bull run, everything's overpriced, everything's overvalued. You'd be crazy to start investing in stocks at this time, but here are my 3 picks because I did some due diligence on each one of these and I really do think that these are performing well. If you haven't done so already, I released my video on my gains over the past 2 months. So I've released 2 stock picking videos to this point, stock picks for December of 2017 and stock picks for January of 2017, and we're up, guys. I'm not going to tell you the percentage because I want you to watch that previous video where I actually justify and prove that what I recommend is legit. Let's get into the 3 stock picks for February of 2018. Number 1, JPMorgan Chase. So I'll be honest, these shares are far from cheap, but in my view, the company deserves a premium valuation because of this political and economic climate. So right now with the tax bill, Trump's presidency, and also interest rates going up, this is why I picked JPMorgan Chase. So we may think of JPMorgan Chase as a massive global bank for large corporate borrowers, but actually its consumer and community bank arms have been a standout star. In the most recent quarter, average deposits grew by 7% year over year, and this is focusing on smaller accounts as I just mentioned. So credit cards have also been a persistent winner with average loans rising more than 5% compared to the year previous. JP Morgan is also getting into the business of payments processing, and I think we're seeing more and more of this in the digital age. So as merchant volume grew by 12.8% thanks to their ChaseNet arm, and also a partnership with Visa. I do admit that their investment banking arm hasn't been as good as of late as it usually is, but when you look at the numbers, they were still ranked number 1 in investment banking fees in 2017, which is still encouraging. So let's take a look at the 1-year chart. You can see the ROI has been right around 37%, and in the 5-year chart, you can see that it's been in the neighborhood of 139%. That means you've doubled plus 39%, so a double and a third essentially of your initial investment. So JP Morgan's diversity and strong consumer arm is one of the many reasons I like it as a bank stock for 2018 and beyond. Number 2, Align Technology. Align Technology is the creator of invisible braces called Invisalign. This is another stock that looks pretty expensive, but it's on my to-buy list for a few reasons. Orthodontists still use metal braces on most of their patients, but Align Technology's Invisalign is becoming more common now that improvements support its use in teen cases and also complex cases as well. I work with people that wear these and I've seen them multiple times in person, and you can barely tell that they're wearing them. It really is a very innovative product that solves a lot of problems. There's a lot of, and please don't take this the wrong way, but there's a lot of self-consciousness that goes involved with being an adult that wears braces or even being a teen that wears braces. It's a very anxious point in your life. So I think that this product cures a lot of that self-consciousness because they're not as visible. So Invisalign is the leading transparent teeth straightening product, and its rapidly growing sales worldwide are a big reason why I recommended it on this list for February. So ultimately, its shares have quadrupled since 2014, which has been absolutely incredible. Despite growing demand, it's only still secured less than 10% market share, suggesting that there's plenty more room for growth up, and that's why it's on this list for this month. So the company's Q3 performance shows that momentum isn't slowing either, and it shipped more than 236,000 Invisalign cases to the quarter, and it's up 178,000 cases from the year before. That's absolutely incredible growth. Invisalign had sales of $385 million and profits of $83 million, which is up 38% and 61% year over year respectively. Its international sales skyrocketed 47% year over year in the Q3 as well, and it's nearly doubling its growth in North America for the same time period. So as key global markets, including China, get increasingly wealthy, I expect international sales will continue setting the pace. It's also important to realize that while Invisalign is getting more frequently used in the teen market, its market share in that demographic is only 4%. So they still have 96% room to grow within the teen market, which is absolutely awesome. Let's take a look at the 1-year chart. You can see the growth over the past year has been a staggering 209%, but check out the 5-year chart. The 5-year chart shows growth of 767%. That's almost 8 times your money in 5 years, you guys. That's absolutely insane. So I'm sure their stock won't keep going up as it is right now, and there will definitely be bumps in the road. Nevertheless, they have strong brand recognition, robust bottom line growth, and a massively unpenetrated market position. It shows that its shares are only going to go up from here. You heard it here first, and if I'm wrong, just disregard this whole recommendation, and this never happened. Where's that Men in Black pen that just kind of erases your memory? All joking aside, you guys, I think that this stock has a lot more room for growth, whether it's in share price or an eventual stock split. Number 3, Becton, Dickinson and Company, BDX. This is my defensive pick of the month. So they are an S&P 500 Dividend Aristocrat. So if you don't know what a Dividend Aristocrat is, on a side note, I highly suggest you Google that term right now. If you don't know what it is, it's a company that's essentially in the S&P 500 and it's raised its dividends consistently for the last 25 years or more. So BDX has actually raised its dividend for 46 consecutive years. That's absolutely incredible because that shows strong financials and competent management. BDX made a huge splash recently when they agreed to acquire competitor C.R. Bard for $24 billion. That's absolutely insane. That's a huge acquisition, especially for a company the size of BDX. So this is the reason I'm putting Becton on my to-buy list, because this acquisition will actually allow them to scale even more than before. This scale will allow BDX to control their prices on syringes and vials even more than they already do have, and especially as it rolls out more and more innovations to improve product safety. So this stock is definitely not trading at a discount, but BDX offers a really nice dividend and it offers security, since an economic downturn will not necessarily affect the demand for hospital supplies. So those are my 3 picks for February of 2018. Again, if you want some credibility, go look at the video that I just released. It talks about my returns for months of December and January on the stocks that I recommended. The question of the day for today is, do you agree with my picks for this month? Whether you do or don't, let me know below. I'd love to hear more from my audience. And again, please share this video with at least one person that you care about, whether it's for finance or to prove them right or wrong on some stock picks that you guys may be arguing about. So ultimately, thank you so much for watching and have a prosperous day. Hey, didn't you used to wear Invisalign, like those invisible braces? Yeah. Oh, I couldn't even tell. It's like they were invisible.